You had said earlier that China was willing to hold out longer. They had more patience. I thought that that would actually hurt Trump's base, but you said otherwise here.
Yeah, so I think there's a chance when we think about, what is the impact on hurting the economies of the states, hurting the businesses in these states. Okay, that's one thing. But if we think about, will it actually detract Trump voter base? Well, it could actually strengthen their resolve if they feel like they're being targeted by these tariffs, because here's the evidence that indeed you do see that China is explicitly targeting them.
Right. So basically back against the wall kind of mentality here. If they're going to target us, we're going to fight back as best we can.
That's right. That's right. But at the end of the day, if the economy slows, if the unemployment rate were to turn, if that outlook changes, we're probably going to be far more likely to respond and change our stance on trade, I think, than China would.
Okay, so on the economy, you talked about unemployment, 3.8%. We're expecting something like 3.5% or so. Eisenhower numbers here, right? In terms of that, and through the lens looking at what the Fed is doing right now, what's your top takeaway with the expectation now we're leaning to 2 hikes for the rest of this year?
Well, I'm concerned about trade for next year. I've been forecasting 4 rate hikes this year since last year, and I've been expecting no hikes next year because I think that the higher interest rates, they're going to weigh on housing, weighs on autos, and the trade mix comes into the picture. And I think there's a risk that that could dampen the growth outlook to the point where the Fed might need to pause. Because, of course, the Fed is still reducing its balance sheet in the background. So that party hasn't stopped. They're still doing that. And that might mean they may need to pause at the end of this year.
Jason, it's not just the uncertainty that adds for the U.S. economic outlook, right? I mean, trade being such a globalized story, you've got everyone essentially other than, well, Australia and also the Bank of Japan moving to tighten. Does this give pause to most central bank policymakers around the world, do you think, particularly as the potential trade war comes at a time when we are seeing a softening of a lot of economic indicators?
No, I think that's absolutely right, Heidi. I think this is a big concern. We've heard the IMF talk about it numerous times. There was a reason on Friday that commodities almost across the board took a hit. If you look, it wasn't just oil. It was aluminum. It was copper. Even gold prices took a hit. Natural gas was the exception because of an inventory situation that's quite bullish. But a lot of commodities took a hit on Friday. And if we look at the IMF growth numbers, the reason they've been expecting 3.9 as the growth rate for this year and next year is because in the second half of 2017, global trade surged, and that supported growth. And that was really critical. And that means if trade comes into question, that's something that could be bad for the global economy. And this week could overshadow something like OPEC because oil prices are going to be under pressure from these issues.